Welcome to Quantum Finance. My name is Parker, and this is our end of week recap for the week ending October 6th. So, in this video, we'll take a look at all the charts, then we'll go over some news and data from this week, and then we'll take a look at the economic calendar for next week. So, starting here with the S&P 500 SPY ETF, green week this week in the S&P 500. As you can see, bottom ticking down here at this lower extreme on the weekly chart, which also did basically line up here with these previous highs back here from January. If you remember in the past couple videos, I did say we had room down to that 415 to 420 level. And as you can see, we hit a 420.18 low this week on the S&P 500. So getting a nice bounce here off of a major support level. If you look here at the daily chart, as you can see, bottoming me out here on Tuesday, getting our nice reversal coming in today. As you can see, getting up really close to these previous highs here from last week, sitting right there below that daily midline. So nice bullish reversal here in the stock market. Turning to the debt market with the U.S. 10-year yield, another big green week here in the 10-year yield as it continues its breakout to the upside. We can pull a Fibonacci extension here, and if you do pull this extension, from the highs to the lows of this kind of range, as you can see, we pretty much got right up to that 1618 Fibonacci extension target. So I would maybe expect with the bottoming out here in the stock market to coincide with a topping out here in the debt market. As you see, getting a pretty solid wick here to the upside this week. So maybe we will see a pullback here in the debt market as it is very extended to the upside. Turning to the dollar, currently red here in the dollar. Still, a little over 2 hours left here before we get this weekly close, but this would be the first weekly close here in the dollar in over 11 weeks. As you can see, a huge move to the upside here, but getting super overextended far beyond that midline, and really running into major resistance up here. So yeah, I would maybe expect, like we were talking about with the 10-year yield, with a kind of bullish reversal here in the stock market to coincide with that top out in the 10-year yield and this top out here in the dollar. So it would be nice to see a reversal coming over the next couple of weeks in the US dollar index. So now we can turn to cryptocurrencies. Bitcoin currently green on the week, as you can see, holding above our weekly midline, which is really bullish here. We actually did poke above these previous resistance level back here from the end of August as well. As you can see here on the daily chart, getting our breakout of this downtrend and pulling in for a retest of that trend line and that daily midline, looking like it wants to get a nice squeeze to the upside here. Looking pretty bullish on the daily chart. I would maybe expect a target of towards this like 29,000 as your first kind of target, and then up there towards the upper end of that weekly range, up there towards that 31,000 kind of level. As you can see here on the weekly, this upper extreme lining up with these previous highs back here from July. So yeah, cryptocurrency is looking pretty bullish here. At least Bitcoin is. So now we can turn to XRP. XRP green week this week, still currently sitting below that weekly midline. If you remember last week's video, I did say we were looking for a strong close here above that about 55, 56 cents level before we start getting more bullish here on XRP. If you do look here at the daily chart, kind of looks like an inverse head and shoulders pattern. As you can see, your left shoulder, your head, your right shoulder, and then your neckline getting a breakout here. We can kind of draw this as maybe a potential neckline or just a downtrend reversal. As you can see, getting the breakout, the retest, and then the move to the upside. So hopefully we can get a nice bullish reversal here in XRP to go along with our Bitcoin reversal. Now we can turn to commodities, starting here with oil. Massive red week here in oil. If you remember last week's video, I did say this looked like a topping candle here on the weekly chart, as we did run into that upper extreme and this major resistance level up here. As you see, huge aggressive sell-off this week, pulling down here into that weekly midline, which does line up with these previous highs back here from April, January, and last December and November. So pulling into a major support level here, as you can see the bids coming in down here at a low of 81.56. So pulling into a pretty major level of support here, would maybe expect some type of slight bounce coming here in oil. Turning to gold. Gold, another big red week here in gold, continuing its sell-off to the downside, getting really close to these previous lows back here from February. Really only a couple, let's see, these lows were at 1804, and these lows this week were at 1810. So, only a couple dollars off from these lows, but as you see, getting a nice bounce here today, getting a nice reversal after a lot of selling. These previous lows back here, which is pretty much bouncing alpha of, do also line up with these previous highs back here from August. So running into a pretty significant key level here in gold. Turning to silver, Another big red week here in silver as well, but as you can see, kind of the same story here in gold, getting a nice bullish reversal today with a large wick to the upside. Candle still hasn't closed, but I would expect if we do get a close way up here, this could potentially be a type of bottoming candle here in gold, or silver, excuse me. As you can see, these wick lows down here lining up with a pretty significant key level. These previous highs back here from August and these previous lows back here from November, it's pretty significant support levels here in precious metals. So now we can look at the news and data from this week. So starting here, we had 336,000 U.S. jobs added in September, well above the expectations of 160,000 jobs. And that is the 33rd consecutive month of jobs growth in the United States. We also have bank credit officially contracting, and this has only happened during the great financial crisis, as you can see down here, going below our zero line. Here we have a chart showing Walt Disney's stock price, as you see down here, to its lowest levels in nearly a decade. We also had the average interest rate on a 30-year mortgage rising to 7.88%, which is the highest level since September of 2000. Since December of 2020, the average rate on a 30-year mortgage has officially tripled from 2.6%. The 10-year note yield is now up 50 basis points since the September Fed meeting exactly 2 weeks ago. Housing affordability is at record lows, and the average payment on a new home is about to hit $3,000 a month for the first time ever. We also had some news coming out from the Ripple lawsuit that the judge did deny the SEC's motion to file an interlocutory appeal. We also have new construction of apartment buildings in the U.S. plummeted 41% over the past year, the largest year-over-year decline since 2010. Here is a chart showing the national debt been growing faster than GDP for nearly 10 years. However, U.S. national debt is now growing faster than GDP at its largest margin in history. As of 2 weeks ago, the national debt crossed $33 trillion, nearly 124 times as big as it was 70 years ago. Over the last 2 weeks alone, we have added an additional $450 billion to the national debt. Currently, the debt-GDP ratio sits at 120%, just below its 135% peak in 2020. So we can look at the economic calendar for next week. So Wednesday, we do get the PPI, which is the Producer Price Index, and we also get the Federal Reserve's meeting minutes. Thursday, we get CPI, which is inflation data, and initial jobs claims, and crude oil inventories. It's a pretty big week next week. Not a whole lot of data coming out, but the data that is dropping is extremely significant. As you know, inflation is basically more or less what is controlling the narrative these days. But yeah, that should do it for the video. Appreciate y'all watching, and I'll talk to y'all later.